inflation is going to be the main focus. Okay. So if inflation pops up again, that is going to be extremely hard for the Bank of England to ignore. But reactions that we're going to see is that the pound currency is going to give us some strength from a higher inflation print. And then we're going to see the UK 100, like the FTSE 100, if you guys are trading that, will show a little bit of relief. We're going to see the equity markets of the United Kingdom pushing lower. Okay, so this is going to be the main focus for this week, knowing that we are going to have a rate decision also. But I'm going to just go over inflation data for the UK and give you guys some ideas so you could take some really good tradable opportunities for this later on during London session. Okay, so this CPI print for August, just going to give you guys an example, just to do some wordplay for you guys first. On Wednesday, CPI is sitting at 3.8%, okay? And I'm going to just show you guys the chart right here because it's extremely important to pay attention to this. And it's kind of odd, right? But this is ideally for you guys wanting to learn more about fundamentals, right? Because this is exactly what the central banks pay attention to. They pay attention to these charts, right? And we could just see from the year, like currently we're sitting at 3.8%. And this is core CPI. This is definitely what the Feds, the central banks do control. And sitting at 3.8%, we have to know their target goal is to around 2% pretty much. And seeing for this year from 2024 all the way till now, we've been seeing inflation lower for the UK coming from the highs. I remember the Bank of England was really close to 7%. But we're just seeing this is what they mean by sticky inflation. You can just see how the trend is just staying at the bottom. We're not seeing it push any lower, right? That's one of the problems that the United Kingdom is dealing with, okay? So if we could see inflation peak up to about 4%, that is definitely going to be a concern, right? So my question to you guys, do you think that UK inflation is going to go above that 4% goal, or are we going to start seeing some easing pushing lower, okay? Because the Bank of England, the BoE cutting rates to 4% in August to narrow the vote. So with the rate decision, the vote split is what's extremely important. So the last meeting, there were Bank of England members concerned about inflation. So more members actually voted for a pause. And this is exactly why. And that's what's leading us to a direction when we're trading the pound moving forward. Okay. And just a snapshot of what I have for the private group. You can just see that inflation is still sticky. It's the main focus right now. So if we get a higher inflation print today, that's just going to lead to chances of them holding rates more higher than expected. Okay. And if we do get a big drop, that could lead to a massive downside reaction in the pound pairs, because that's going against the bigger picture, right? Bank of England members are expecting higher inflation to remain sticky. So if we do get a surprise tomorrow, we're going to see a really big reaction. So this is just to give you guys a snapshot of inflation data. So you could look at the high, look at the low, right? Because expectations, right? If we get inflation above a 3.9 or 4%, that's going to be the surprise reaction, right? If we see that CPI is below that 3.4, that's going to be the surprise reaction. So make sure you snapshot this, or just remember it if you guys are trading UK data, all right, moving forward. And it's extremely important because we do have these rate decisions coming up, and a hot inflation print, what that would do, right, especially if you're trading the pound. If we could already see that GU, look at this, but this is mostly is from both pairs, right? We already have a Bank of England that is more at a hawkish pause stance. And then we have the Federal Reserve that is leaning more towards their dovish stance, right? So with that hotter CPI, if we do get a hotter CPI print tomorrow, that's going to lead to more buys in GU, okay? We're going to see GU continue to push up higher, breaking structure to the upside, and it's going to give us continuations, especially if we see that the Federal Reserve is more dovish as well, okay? So these are one of the pairs that you could look for if we get a hotter print. Now, what we could look for optional that could be more neutral, you could focus on GJ, and we do have the Bank of Japan rate decision. But from a rate perspective, right, the yen is a cheaper, the rates are a lot lower than the Bank of England. So just from that understanding from central bank divergence, we already have strength from GJ overall. But we could be more neutral when it comes to this pair, saying if inflation for the United Kingdom does come in lower than expected, we could be looking for sells on GJ, but you could also look for buys too, because all the pound pairs is going to be impacted. The same thing like GBP AUD, that's going to be another opportunity you could look for as well, just because the pound is the first currency. So we could get opportunities in both directions. Okay, guys. So what you guys want to take advantage of is going back to inflation data, looking at the high. If we could get these numbers to actually go above or close to, we're going to see stronger pound and we're going to see weaker UK 100, right? If we could get those numbers higher than expected. That to me is going to be that's going to add more risk, obviously, because a hawkish Bank of England, that puts more stress in the United Kingdom, which could cause recessionary fears, which could also cause slowdown. It's going to hurt the labor markets. But temporarily, that could cause pound strength. And what we want to stay away from, if data comes out as expected, if data comes out the same, we don't have an edge. Okay, so it's best to just leave it alone if it comes in line. If we want to look for a weaker pound, we need the numbers to come low, all in red, or at least breaking below those numbers, so we could see that sticky inflation is no longer there. And if we do get a miss, I think that would be the best tradable opportunity, looking for weakness in the pound as well, because the Bank of England, they're not likely to hike rates, but they're more likely to cut rates if we get a weaker inflation print. All right. So that's what's going to lead to a weaker pound and stronger UK 100. Okay. If you guys want to trade that. And I will be going live with the private group. So if you guys are interested, in going live with me, trading this live, I do this all the time with the private group. As you can see, the recordings are here. We traded the UK labor data the other day, and I'll send the Zoom links here with the guys so we could actually focus on it. And you guys could see a little bit of the data. Like last night was no opportunity. Okay, but hopefully we can get one here, guys. Hopefully this video is very helpful for you guys. Looking at the pairs, right? Just look at my educational videos as well, talking about entries, so you can learn how to take entries from data. And if you guys have any questions, if you're trading in the UK, if you guys take some good profits, let me know in the comments below.